Steve, hi. Welcome back. How are you?
Hey, good morning. Good morning. Good to see you.
Good to see you, Steve. Some interesting action we've had here. I
Certainly
think
is.
I watched.
Probably,
Go ahead.
probably the first comment is that you made on the diet and the slimming thing. I've actually been on a program for almost a year, and it's been fantastic. So yes, I've lost weight, and I am
Okay.
slimmer. I used to be
Well,
slim, but now
turn
I'm
the
slimmer.
camera on and let's see. Sometimes where'd you go? Oh, there you are. All right, look at that
Hey,
guy, handsome guy. So is it, what kind of diet is it?
actually, I went on a variation of primal, paleo primal. So
Okay.
I
A
stopped
lot of
eating.
protein.
I stopped eating grain completely. I haven't eaten
Okay.
grain in 11 months.
Yeah.
Very little added refined sugars and almost none, and no
Good.
lentils either. So basically, I live on really fresh stuff, chicken, turkey,
Yeah.
all kinds of vegetables, fruits, nuts, all of those things. So it's been great. I haven't really veered off of it for 11 months. I'm down about 20 pounds, and I don't feel like I'm on a diet. It's just been great.
Okay. Yeah. You found something that suited you.
Yeah,
So,
it's been really good.
I caught one of your videos, I don't know, a week or so ago, and you were talking about that it was due this week, some type of little rebound high that may or may not make a new high. Then you're looking for down and a pop in the VIX. My takeaway was that you're viewing this as just a correction. You're in the correction
Well,
camp.
I'm viewing this as a correction in the market, but
Yeah,
while I am looking for, a pretty good decline still, I'm not really sure about the quality of the advance after that. I know a lot of people are looking for, potentially new highs in the stock
right.
market.
Yeah,
I have not been, and if you watch my video from the beginning of the year, when I did the big pictures, I looked for a bull market year this year, but maybe only the Dow making a new high. That the Nasdaq improved some, so that was possible. But I really think that we're in a secular bear market, and that this
interesting.
is just a cyclical bull. I think we're back into the 1970s right now,
All right.
where or similar to the 30s or 70s, which were secular bear markets that lasted about 13 years. So I think that we're a few years into that right now, and maybe another 10 years of a really challenging time for investors.
Okay, great. So I'm glad I had you on because I think the battleground's going to be about, I don't know, a little bit under 4,200, maybe for this first decline.
Yeah, I can
And
show you my
yeah,
weekly charts are
sure.
reflective of that if you'd like to
Yeah,
see that.
I love your charts, Steve. I don't know what I do for 4 months, 3, 4 months.
Can you see my charts now on the S&P
Uh,
500?
yes, got them. Got them
Okay,
both.
good. Okay, so on the left side is the weekly chart, and on the right side is the daily chart, and I'm going to blow up the weekly chart so that you can see. For those of you that are new to our charting style, this is cyclical analysis, where we look at the rhythms or the heartbeat of the market. On the bottom are a drawing tool, cycle brackets, that just simply gives us the average harmonics in the movement. And this is money flows, is really what it is. And when a cycle is bullish, as you see right over here, by having a higher bottom, the probabilities are high of making a new high as it moves up, which is exactly what happened. Beginning of the year, we were unsure whether this was going to get tested down over here on the low, but then it became clear it wasn't as it turned up from the supports. And now you can see these yellow zones. That's where you're in corrective periods,
Okay,
where both of the cycles are moving down. And that's what you have right over here.
right.
So we actually were looking for this corrective period to occur. Now, our proprietary momentum indicators, you can see right over here, this has been the positive momentum where our reversal scout was positive in green and moving up. And this is where it is turned down right over here, indicating to us that this cyclical correction is now in the works. So what we're looking for is a decline out into the period of mid-October. That's because
There's there's an eclipse then too, Steve, so that's a little confluence. I've seen a lot of emotional lows and highs on, it's an
Oh, I don't
annular.
really follow that, but that's interesting.
Yeah,
So you
so
can see our targets over here. This is around 4,300. This is 4,200, and this is right around 4,110 or something like that. So that would really be the targets with troughs in the area of October. And then over here, the next rally phase, which takes you out into the end of the year. And you can see I don't really have it right now drawn going up steeply. I don't really know how low this trough is going to be here out in October. And I'm going to switch over to the daily chart right over here. This is giving us some interestingly negative messages because what we were looking for was a rising phase. And as you said, you saw my video where I was looking for a rally and then more down. That would match this declining periods out over here, which take you out into October. However, this is extending down. And you can see I have two different scenarios in here, which is maybe it's already had this period. We call this a left-hand translation, and it's just under so much pressure from the intermediate patterns that it can't rally, or we get a little pop up in here for the next week or so, and then it turns down again. And this is just extending. It's a little early for me to know that, but no matter what, it is a negative condition. You can see down over here on our very interesting slim ribbon PO, which this is called. This was positive. You can see it's green with these arrows giving you the upward resumptions. And then it neutralized, and now you can see it's turned red. And that's the first time since back in April that it has done that. So these are some very negative indications for the stock market.
Could we have a crash, Steve?
Well, you get crashes.
Is it set up for that like a mini crash?
You get crashes in time periods where the cycles are aligned on the downside, and you have that right over here. Now, because of the configuration and how far we are from that cycle low, way down over here at 3,800, 3,750, then the probabilities of that are small. But the time frame for a big decline, the window is open right now. So that is a possibility, as we see in here. You know,
because there are a lot of things going to March levels. What's happening in the Chinese currency, what's happening in the yen. They're almost back to where the market was when it turned in October.
You know, that's true, but you have to also look at very different circumstances in those countries and where we are right now. So it doesn't mean that, you know, you can't get their, you know, Chinese deflation exported to us, because with the yuan getting so weak, they certainly could be exporting their deflation to us. If that were the case, the bond market would be screaming. And the bond market right now is much more reflective of disillusionment in the recessionary scenario. So,
or is it supply?
Well, I mean, it's both really, because the government really has, you know, $1 trillion to refill in their coffers.
Right.
And the fact, you know, that also fights against the fact that the government is so insanely stimulating through printing, creating of money, while at the same time they're tightening through their other aspects. So you have this, you know, strange, really fight that's going on between different parts of the government. And, you know, the consumer is still strong based on the fact that they pumped all the money in that they could back a few years ago, and that's still out there.
That's hard to believe.
Well, it's weakening, and you can see
for
that
the average guy. You know, I mean, they stopped sending checks 2 years ago. People may say they were getting an extra $2-3 grand a month, not the people who ripped off the government for the getting paid for each employee they never had.
So what you're saying is makes it even more likely, since the markets and investors are thinking that we're only going to have a soft landing or no landing, that actually what we're going to have is a very hard landing, because eventually the consumers are going to run out of money. If you look back at what Volcker did, you know, inflation's not going away really, and you're likely to get the Fed to keep doing what they're doing, which is kind of covertly raising rates in a maybe less intense fashion, but they could be raising rates all the way through 24. We don't even know, unless there is a very sharp downturn. So
Right.
at
Why
some
would
point,
they stop unless we were, had a big break in the market?
yeah, that's the
And the
only way.
banks, Steve, the banks, the XLF really didn't make much hay.
No.
Those were the money center banks, and they don't
And if
look
you
that
look,
much better than the regionals.
I mean, if you look at the Russell is really taking it right now, and of course,
It's ugly.
the
All it did
Russell is
was
very reflective of of the banking that's going on, the
yeah,
small banks. And if you look here, I mean, we're looking for a decline out over here into late September, early October, also.
yeah, right.
So this is really a pretty negative scenario
It's
that we're seeing.
precarious. It was a rectangle while everything was making huge retracement moves from all-time highs.
Yeah.
All the Russell did was move sideways in a range for a year.
Right. So I mean, I'm thinking that, the all of the information that we're getting right now is saying that, well, if there's anything that will be a surprise, there's actually going to be quite a hard landing. And if that's the case, what we're going to see is the bond market turn around and begin to move up sharply. And we will see the dollar start to collapse. And I think I'm going to switch over to the euro here for a second, because I heard
that'd be great.
I heard
Love
you guys talking about it, and US dollar is what I'm putting up right over here.
Okay.
And this shows you that we're in a very interesting period cyclically, because the cyclical rhythms, and remember, the left is the weekly cash. You can see right over here, there is a major trough in a very bullish formation right in here. So the euro is very due, and you can see the buy zone listed right over there. The euro is very due to bottom. Now you can get some chop over here out into sometime into September before the euro really starts to be able to move up. But then I think what you're going to see is some a pretty good upside movement in here, and some pretty good downside movement in the dollar. I think the dollar only has a minimal amount of rally left in it. And I'm going to show you a monthly chart that I don't really show normally on when I put this up on social media, but I'm going to blow this up right over here. This is the magnificence of the cyclical harmonics that you see here in the dollar. And each of these time periods where there were, the harmonics were pointing to corrective periods, that's these yellow zones right over here and here. There was a major breakdown in here that said we're already in this corrective period. And while the intermediate patterns suggest it could get up to 104 or 104.5, this is a period where I'm telling you that the euro is getting ready to bottom, that the dollar could get slammed. And the support here is at 94. Maybe it's the BRICS. Maybe it's the fact that interest rates will begin to move down sharply because it's really going to be a hard landing. I'm not really sure what I see in there, but this is a period right over here. Now I'm going to blow this out a little further. There's a note here similar to 2006 where there was a breakdown. If you look over here, this pattern in 2006 right here is identical to the pattern right over here. And what happened was that after it broke that support, which it did here, it got a little bit of a rally and then collapsed. That's what happened right over there, as Greenspan essentially killed the dollar back in that period. So this is a period right in here that is suggestive that this rebound we're having in the dollar is likely to fail, and that the market in the dollar is likely to have a sharp decline. And of course, that sets up a bullish period for the metals also, which I think has been it has been delayed. The patterns in there are not looking great on the metals right now.
No, they're not.
But that's just a period where this, I think, artificial support has come in for the dollar because of the belief that interest rates now are not really going to go down, or there's not really going to be a hard landing. So, but I think that's all going to change. And I think it's all probably in weeks ahead that we're going to see some changes in that.
Okay. Interesting. Any other asset class you want to cover? You have a view on oil?
I do. I can show you a /CL, which is the oil market right in here. And I'm just going to put up the side by side. for you to see. And what we're looking at here is a bottom getting ready to form on the daily right over here.
Okay, see
But
that.
you see the lateness and the this evening star pattern on the weekly.
Yeah.
And it points to a continued corrective period out over here into September. That's this minor cycle right over here. And if I highlight this cycle, it will give you the date of that next trough that we're looking at. We get that to come up. So that's September 29th right there. So that says it's likely to try to rally and then come down again into this September period out over here, maybe beginning of October. That's this cycle right over here. And then you could see, based on this extremely positive formation and this giant inverted head and shoulders, that it could get all the way up here towards 100. This is 98 up there, where that major resistance is. So I think that come Q4,
Nice look.
that oil really has a potential to move up very sharply on the upside.
Okay, so basically the takeaway is that what's been going on now can last until late September, mid-October, and those are going to be important inflection points to watch across the board.
I think so, and with the potential for the euro currency to get ahead of them and to get into a choppier, more supportive period right now. And then when the dollar, I think, heads significantly lower, of course, that'll be influenced by maybe several things, but certainly the euro currency beginning to move up significantly. Interest rates.
Would you expect foreign markets to outperform, Steve, when this move starts to happen in the dollar? It's usually risk on in equities with the weak dollar, but could we get to a point where it's too much of a good thing and the market doesn't like a weak dollar, that it's flight capital away from US dollar denominated assets into other markets?
I think that is going to happen next year.
Okay.
I don't think it's happening this year.
But could we have a weak dollar and a weak equity market here in the US at the same time? Because it hasn't been that way.
You
for a while.
can, and I think that would be in the time period where it's very obvious that we're in a period of de-dollarization.
Okay.
And certainly look at India and the UAE now doing business in oil in rupees. So
they're trying to get Saudi to join the BRICS.
Yeah, and they're probably going to also. So
that's a real bearish thing for the dollar. It was petro currency.
The US dollar has been, I don't have to tell you how it's been destroyed over decades. And right now, it's just simply in this window of time where it's getting a little bit of a lift. But
Steve, sometimes I wonder if that the savings bonds that I got for my bar mitzvah, if I should have hedged them back then. Do you think the dollars are, worth a little bit less, even though we're having a dollar rally now, than the dollars I had at my bar mitzvah?
97% loss of buying power since your bar mitzvah. So if you still have those, they're probably not going to buy what they bought back then.
Yeah, and some copper company that went defunct.
What year was your bar mitzvah? Give it away.
Okay, 1966.
Mine was 1963, so I'm 3 years old.
Okay, all right. Well, look, this is what happens when two pro-veteran bar mitzvah boys get together and talk markets. You guys just saw it today for over 50 minutes.
Right. Well, I've been, became a member of the CBOE in 1974 in May.
Okay.
So I'm in my 50th year as a trader.
We should have met each other. I was at the Merc in 76.
Yeah.
So anyway.
I was at the Merc there also. So there you go.
Yeah, kindred spirits.
Yeah.
Steve, great. I really appreciate your giving spirit for showing your work. And one thing I could say about Steve, he's honest. He's kosher. He's not going to give you poison. And check out his work. It's very enlightening every time I look at it. So
Yeah, I'd like just to mention everybody should just go to askslim.com and take a look around there. You know, become a free
you
member and
want
you'll
to
get
show your
some.
website quick? You want to show it? Go ahead.
I don't think I have it set up to show to you, so I
Okay.
won't do that right now.
Okay.
But yes, I should have said
AskSlim.com is
Correct.
the website, just like your Twitter handle at AskSlim.
that is correct. That is
All
correct.
right, Steve. So appreciate you being with us here today. L'chaim, brother.
All right, good to see you. Take care.
All right, buddy.
Okay, bye-bye.
Ask Slim, Steve Miller, everybody. Hope you enjoyed it. You could join the team in about 17 minutes, 18 minutes on the morning edge. Steve, good hunting, and talk to you in the fall or winter. See how things played out.
All right, be great. Take care.
All right,
Yeah.
everyone. My trading warrior brother, Steve Miller.
Bye-bye.
Adios, everyone.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.